Namaskar and good evening. Doston, today we will look at a very prosperous company by name Gujarat Fluorochemicals Limited. It was earlier called Inox Fluorochemicals Limited, part of the Inox group of companies, specializes in fluorochemicals. It's one of the top 5 global players in fluoropolymers market with exports to Europe, Americas, Japan and Asia. Devendra Kumar Jain is the chairman and non-independent director. So the whole board is filled with very brilliant people. Now, first we'll take a brief look at the quarterly results. Sales in March 22, that is Q4 of last year, 1074 crores. Then next quarter it went to 1334 crores, next quarter 1461 crores, next quarter 1418 crores, and the latest quarter 1471 crores. Q4 FY23 1471 crores. So what is the year-on-year improvement? 36.96%. Sales improvement year-on-year is 36.96%. And every quarter there is some improvement at least. Quarter-on-quarter there is an improvement of 3.74%. Expenses have also increased from 742 crores to 942 crores. That is enhancement of 27% year on year and 5.25% quarter on quarter. Operating ratio has operating profit has increased from 331 crores to 529 crores, which is quite impressive. Something like 60% improvement in year on year and 1.15% improvement quarter on quarter. Operating profit margin has improved from 31% to 36%. That is 16% improvement year on year and slight decline 31 to 34 quarter on quarter. Sorry, last quarter 37, now 36, slight minus 2.1% decrease quarter on quarter. Improvement year on year, if you see, 16.13%. Then net profit. Net profit has improved from 218 crores 5 quarters ago to 303 crores, then 357 crores, then 331 crores, then 332 crores. Net profit improvement is not very great, but year on year it is great, 52%. But quarter on quarter, etc., it is not great. Only 0.3%. Market price is around 3,382. Therefore, price earning ratio based on that market price and latest EPS of 30.21 is moderate. Then we'll go to P&L account. P&L account of the last 5 years. There also we'll see a little summary wise only. Sales has improved from 2,729 5 years ago to 2,606 4 years ago, 2,650 3 years ago, 3,954 2 years ago, and last quarter 5,685 crores. Of course, expenses have also increased from 1,941 crores to 3,638 crores. Sales have improved impressively. Expenses have also increased. Quite natural. Operating profit has increased from 788 crores to 2,047 crores. Operating profit margin has increased from 29% to 36%. That is where it stands now also. EPS is around annual EPS, it has increased to 120.97%. Last year it was only 71%. Earlier it was minus also. Dividend, they are not paying dividend. Now, key points if you want to see product portfolio comprises of fluoropolymers, fluoro specialties, refrigerants, and chemicals. Fluoropolymers is its mainstay leading producer globally. Fluoro specialty chemicals, here also it is aggressively selling its products, HF based, TFE based, and KF based fluoro specialty chemicals. Then comes refrigerants, largest manufacturer of HCFC 22 in India and the preferred supplier for leading OEMs and service partners globally. Then comes other chemicals. Company is a leading producer of industrial chemicals such as caustic soda, carbon tetrachloride, chlorine, methylene dichloride, and so on, hydrochloric acid, sodium, hydrogen sulfate, hydrogen gas, fluorospar, and so on. Now, GFL has developed technology and products which would help it to ride the wave of new and upcoming industrial verticals such as electric vehicles, solar panels, hydrogen fuel cells, electrolyzers, and electric batteries. In all these things, it has developed the technology and the products, and they are the future technologies. Manufacturing facilities, one at Dahej for fluoropolymers and chemicals, and another in Ranjit Nagar for fluoro specialties, and last one in Morocco for fluorospar mining. So the units work with capacity of over 65,000 tons per annum for HCFC, 16,200 tons per annum PTFE, 1,34,750 per annum caustic soda, 1,08,500 tons per annum chloromethane. Now for Q2 FY22, from then onwards, they are running. Most plants are running at full capacity. Now for the latest quarter, new fluoropolymer capacity utilization also is around 100%. For specialty chemicals, the capacity utilization has been low for pharma-related intermediates due to demand displacement in favor of COVID-19 related drugs. That is normalized from Q4 last year. Now there is everything is normal. End user industries, if you see, oil and gas, printing ink, semiconductors, chemical processing, wire and cable, automotive and agrochemicals, pharmaceutical ingredients, textiles, solvent, pharma, air conditioners, etc. So, lot of industries are there which use the products manufactured by Gujarat Fluorochemicals Limited, and see, that is the reason why Gujarat Fluoro is expanding its capacities in all its branches. Last 3 years, furious expansion is going on. The company has international warehouses and sales distribution network in both the Americas, at Michigan, Philadelphia, Atlanta, New Jersey, Mexico, Brazil, Argentina, European Union, UK, Belgium, Italy, Germany. Rest of the world, South Africa, Thailand, China, Korea, Taiwan, India, Japan. Now, if you look at the revenue breakup, presently 51% of the revenue from the domestic market comprises of what? Refrigerant gases 10%, caustic soda 17%, chloromethane 24%, polytetrafluoroethylene 20%, other products 27%. Now geographical locations, if you see, 49% of revenue is coming from the foreign market, like Europe 22%, USA 90%, rest of the world 19%. USA 9%, Europe 22%, rest of the world 19%. Capex, for the last 3 years, it is spending a lot of money. FY22 600 crores, FY23 900 crores, FY24 proposed 1000 crores. So, if you look at the amount of expansion going on, reasonably we can say certainly that after 3 years or after 2 years also, Gujarat Fluoro is going to be a much bigger company than at present. Now the focus is on electric vehicles and renewable energy, vehicle batteries, electric vehicle batteries, solar and green power, hydrogen, etc. So strong focus of government everywhere for green hydrogen and hydrogen fuel cells. That is going to increase the demand for PTFE and other fluoropolymers. In other words, demand for Gujarat Fluoro's products is going to increase. So it is there in increasing demand for oil and gas industry, water treatment, electrical appliances, electronics, healthcare, chemicals, etc. etc. So demand is very good, increasing demand. Raw material availability ensured. Production capacities are being increased. What do you want? After 2 or 3 years, Gujarat Fluoro is going to be a much bigger company than at present. And if profitability remains as of today, then also you will be reaping good rewards. But you should be watching the results. I am always saying, see, many companies make mistakes at the height of their growth. I have seen it. Laurus Labs was going very well. I'm just mentioning one. Now, it has not fallen very badly, but it has fallen. I never thought that it will fall like that. So, like that. Some groups like the Future Group have fallen very badly by taking too much loans. Okay, we'll come back. Market cap of Gujarat Fluoro is 37,272 crores. Current price is 3,390. 52-week high is 4,174. If Gujarat Fluoro touches 4,174 also, will be very good profitable. Stock price earning is around 28, something like that. Book value 503. ROC 29.6%. ROE 27%. That is impressive. ROCE, ROE is impressive. ROE is 27.1%. ROCE 29.6%. Face value is just 1 rupee. Promoters holding has decreased over the last 3 years. For some reason or other, they have given up part of their minus 4.56%. Still, their holding is very good. The trailing 12 months EPS growth is very good. Strong annual EPS growth also. Good quarterly growth in the recent results. ROC is improving in the last 2 years. Company with low debt. Debt is very low. There is no problem. Strong cash generating ability from the core business. Cash flow is improving for the last 2 years. FIIs, FPIs are institutions increasing their shareholding. Recent results are good. Not great, but they are good. But the way you look at the momentum for growth, you will be impressed. Promoters have increased their pledged shares slightly. That pledging of shares is always bad, but here the increase in pledging is nominal, not very great. So it is okay. Negative breakdown at S1, first support. So latest price is less than first support, which means there is it is normally a weakness. That is, investors are not taking stock of the potential of the company. They are giving it lower than the deserved price, something like that. But brokers have recommended, upgraded their recommendations and target price. RSI is indicating the price strength. So these websites like Money Control have given it 75% pass. Technically, it is in a bullish zone. It is a reasonably strong performer in terms of its operational parameters. Price to book ratio is 8.81, face value is 1, market cap is 37,000 crores, like that. Sector P is around 50, book value per share is 385. Now we'll go to analyst ratings. What do the brokers, other analysts say? Some 7 analysts were examined and most of them say buy. 86% of them say buy. Price is currently 18 and 19% away from 52-week high, 61% away from 52-week low. So it is not in a bad zone. It is okay. There is scope for going up further. Investor sentiment is not that bad. So it is an outperformer compared to Nifty 50. Piotrowski score is 8, which indicates strong financials. By industry comparison, other companies in the industry, it is okay. Market cap is higher than the industry, price earning ratio is lower than the industry, price to book is above industry median, profit growth is higher, revenue growth is higher, operating profit margin also is above industry zone. Shareholding pattern we have already seen. Promoters have pledged 2.76% of the shares in the last quarter. See, stinkingly high manufacturing expansions. What to do? You have to pledge the shares, take the money, complete your 1,000 crores for the next year. Current year 800 crores. Expansions are there like that. So some pledging, 2.76% pledging is okay. You know what is the total pledging? Just 5%, including this 2.76%. 5% shares only are pledged, so there is no problem about pledging. Promoters holding is 63.81%, which is reasonably good. Mutual funds have increased their holdings from 4.1 to 5.61%. FIs have slightly decreased their holding from 5.75 to 4.85. Institutional investors have increased their holding from 10 to 10.76. Price performance, if you see in 1 year also only 25% was there, so it was not a multi-bagger in the past. Will it be a multi-bagger in the future? Maybe. It depends upon how wonderfully they complete their expansions. So profit margins are reasonable, not very great but reasonably good, and demand is quite good. If prices give a little fillip, this can become a multi-bagger. Otherwise, it will give a return of around 25% to 30% easily. So annual revenue was 5,685 crores, and for Q4 it was 1,471 crores. EBITDA was also up by 71% and for the year and 60% for the quarter. So margins are reasonably good. ROC has improved. PAT was 331 crores. For Q3 FY23 it is 332 crores. For Q3 FY22 it was 331 crores. For Q3 FY23 it is 332 crores. PAT margin is around 23%. For Q4 FY20 it was 219 crores. PAT margin was up 52%. So plants are running at full capacity. See, this is one point you have to note. Plants are running at full capacity, which means demand is good. Plant capacity is good. Whatever is produced by the plants is being sold out. That is also good. See, bulk chemicals have corrected during Q4, but are in Q4 and expected to remain subdued. Bulk chemicals, that is the only sector where prices have corrected. Demand is there. but prices have corrected. But fluorochemicals, volumes and prices both have improved. Refrigeration demand will be subdued in Q1. That is their expectation, but it may go up. See, if heat is going up, sun's rays are hotter, refrigerant demand will go up. But their expectation is it will be subdued. New fluorochemicals plants are gradually ramping up production and expected to contribute to increased revenues in coming quarters. Then fluoropolymers. Volumes were stable in Q4, prices corrected marginally. Fluoropolymers. Planned shutdowns. See, this is one thing that it is a nuisance. Planned shutdown of some plants of fluoropolymers in Q1 for a short time, maybe 15 days to 1 month, something like that, 15 days at least. So, in addition to debottlenecking of PTFE capacity, creation of additional capacity is going on. So, overall, here also we may not see much lower demand or lower sales. So, annual revenues are improving, ROCE has gone up, net debt equity ratio has gone down. Debt equity ratio is going down. ROE has gone up. Working capital days has gone down. That is good. Capex 660 crores in FY22, 1349 crores in FY23, 1500 crores in FY24. It is likely to be varying slightly, but 1000 crores above, it is definite. So it is expanding all its capacity in fluoropolymers, refrigerant gases, battery chemicals, etc. 3 manufacturing facilities in India, a fluorospar mine in Morocco, offices and warehouses in Europe and USA. So like that it is going on. So the company is progressing at a very blistering pace. It has taken minimum loans only. There is no problem. So in all of its segments, it is performing well. Periodically, prices may be subdued in one, may increase in some other, but demand is there. Raw material supply is there. Production capacity is there. So, what is the way? Way is up. That's what I feel. But you must always be looking at every quarterly result and every management commentary. Then only you will be safe, I will be safe. Thank you for listening. I will be back with you with another very good company, which means Gujarat Fluorochemicals also is a very good company. Always remember, every quarterly result matters. You should be watching them. Thank you.